Hello, everyone, and welcome. Thank you so much for joining us for today's webinar, Performing an Accounting Fresh Start in Epic. My name is Kelly Halfpath, Agency Consultant here at Kite Tech. Our presenters today are Lauren Roberts, Director of our Agency Consulting team, and Buffy Johnson, Agency Consultant. We're glad you are joining us today and are so excited to be sharing today's content. For those of you joining us for the first time and may not know who we are and who Kite Technology is all about, we are a managed IT service provider and consulting firm servicing independent insurance agencies and other businesses across the country. We've been around for more than 30 years now, and what sets Kite Tech apart from other IT providers is our expertise within the insurance industry. Many of our staff have previous backgrounds working within insurance, giving us that extra insight on what agencies require to operate at a high level. We find that many agencies underutilize Applied Epic and don't take advantage of many features that it offers. So our agency consulting team focuses on helping agencies use Epic more effectively so that you get the most from your investment. Also listed here are some of the IT services that we offer. If you'd like to learn more about our IT or consulting services, please send us a message through the Q&A and we'll be sure to reach out to you. So with that, I'm going to hand it over to Lauren to introduce herself for today's webinar.
All right, wonderful. Thank you so much, Kelly. Always a beautiful introduction that she does. She's the best at it. So Kelly is also one of our agency consultants who works in accounting and Epic, and she will also be helping with the Q&A in the background along with Buffy for anything that we can just type into the Q&A as well. So I am the Director of Agency Consulting here at Kite Technology Group. I do a little bit of everything. So accounting, of course, being one of my first loves. And I worked in an agency a very long time ago as the accounting administrator. Also worked in several other areas of the agency, including operations, life and health insurance, yes, P&C, and just kind of made my way around the agency and have worked for a couple others as well. So some of the things that I work with as far as projects are concerned for Kite Tech are optimizations, accounting consulting. We do forensic review and training. We also assist with Epic migration. So agencies that are migrating from other systems over to Applied Epic. I'm also going to let Buffy introduce herself. So Buffy, take it away.
Hello, thank you, Lauren. Everyone, I am Buffy Johnson, and I started with Kite about a year and a half ago after previously being an Epic accounting administrator for an independent agency. And before that, I worked many years in corporate accounting and specialized in general ledger management, financial reporting, lots of debits and credits. So just kind of more of the ins and outs of your true financial statements. At Kite, I specialize in accounting support and training our clients, as well as outsource accounting entry. And I, at my old agency, learned about Fresh Start because we did one after I came in. And then here at Kite, have done several. So it's going to be a lot to learn today, but certainly an option that, if that's something you need, just, reach out to us. We'd be happy to help. So back to Lauren.
All right, wonderful. Thank you so much, Buffy and Kelly. Wanted to give you guys an idea of what we're going to go over today. I know that was also in the registration email, but of course we like to recap. So some of the things we'll be talking about today is a fresh start to actually write for your agency. We'll talk a little bit about the difference between an actual fresh start and just accounting cleanup. We'll talk about how to prepare for the fresh start, and we'll also talk about the overview of what's involved in a fresh start. So I do want to make sure everyone understands that a little bit later in the session, when we start getting into the steps of the fresh start, they will not be the exact steps. It is a very intricate process, but we want to give you an idea of what the fresh start involves so that you can be prepared and be prepared to do the work. So we'll also talk about how you can maintain your data in Epic moving forward. We do have an Epic demo database, so if you have questions on reports or anything like that as we're going through, we're going to share some of that. But if you have something that's a little bit more detailed, we'll jump right into that as well. Please feel free to share your questions or thoughts at any time. And let's dive right on in. Okay, so the first thing I said that we were going to talk about is deciding whether or not a fresh start is the right move for your agency. So some things to consider when we refer to making a decision on a fresh start is, what are you doing currently in your agency for accounting? So are you currently processing accounting data in 2 different systems? Sometimes agencies, we find, are trying to put a certain level of information into Epic for reports and things like that, but they're actually running all of their financials out of a separate system like QuickBooks or Peachtree, Sage, all kinds of different things. So if you've been running those kind of separately, you may have some old bulky data in Epic, and maybe you want to get better reports, or even move all of your accounting data into Epic, because Epic really is the best option for insurance agencies to process their accounting data. You may also be in a situation where accounting data has never been entered into Epic. So if you haven't been entering transactions or receipts or disbursements or any of those general ledger items, that would be another reason to do a fresh start. So typically we have agencies who say, hey, I want to move everything over into Epic. We've never done anything in Epic. Well, somebody did at some point. So fresh start means we have to clean all of that old stuff out so that we can start fresh. You may also have a situation, there's a third scenario, where maybe you've entered Epic accounting data into Epic, and that consists of all of your transactions. Maybe you've done some premium payable reconciliations and things like that, but maybe you haven't been following the workflows correctly. And if the volume is just extremely high of the bad data that's in your system, you may want to consider a fresh start, because a cleanup might just be too much. And we have seen some situations where that has occurred. Again, hopefully you've been managing some of your financials outside the system in another format, so that you are staying on top of things like income and balances and expenses and so forth. But we do find that if workflows are processed incorrectly for a long period of time, a fresh start might be necessary. So in addition to that, we might also need to know what's the difference in a fresh start and a cleanup. Now, these are our words, but fresh start is also a term that Applied uses, and Applied can actually provide you with the specific workflow of the fresh start, but that's what Epic calls it and Applied calls it. And then, of course, we refer to cleanup as something that's not a full fresh start. We'll go into that in a little bit more detail. So a fresh start means that you're really wiping the slate clean. You need to start over. So it's bad. You just need to cut bait and do it the right way. All of the accounting data in the process of a fresh start is still in your system historically. What we do in a fresh start is really zero out everything that has a balance, anything that is pending, or transactions that haven't been closed out and reconciled. All of those items are going to be closed, essentially. They'll still be there, but they're closed. Balances then are entered back into Epic as well. So you almost think about this like what you would do when you migrate from a previous system over into Epic. You're going to have to put opening balances back in for your general ledger, and that can be at a couple of different levels depending on what type of data you're actually going to put into Epic. We know that some agencies that are bank owned, for example, might not be able to completely use Epic for accounting because they have a parent company type system that they have to manage financials in. There's still a way to do that. But in many cases, if you've had so much of that bad data, you still need to do a fresh start so you can get it back on track. You'll also have to identify client receivables. So client receivables and company payables that are still outstanding, those will have to be re-entered. Some of those balances will have to be re-entered into Epic, and you'll have to maintain those as far as reconciliation is concerned. You also, here's a big one, have an opportunity to modify the configuration of your accounting methods in Epic. So if you have been using some accounting in Epic, maybe some balances got it put in, you closed a month at some point, you can't actually change the accounting method in Epic very easily without wiping out the data. In some cases, there are different workflows for changing one way or the other. So I won't go into all of that. That's a whole nother webinar. But because you're starting fresh, you can make a change to your accounting methods. So if it was previously set up with, producers on an accrual basis, and you're like, wait, why would we pay producers on an accrual basis? You can change that then to a fully paid or a partially paid accounting method. So you do also have some options at this point. Okay. So then what constitutes a cleanup? So fresh start, we know it's just so bad, it's so far gone. That's a terrible way to put it. It sounds very dismal. But if that's the case, you need a fresh start. But when would you do a cleanup instead of a fresh start? That's a really big question that a lot of agencies have. So when you have a significant amount of good data in your system, let's say you've been doing all of your accounting in Epic. There's a lot of data that's pretty clean, a lot of things that are legitimate, balances for clients and premium payables and so forth. That might be a situation where you want to do a cleanup instead of doing a complete fresh start. You want to maintain that data that's there. You want to bring over the balances and keep those as they are, but maybe there's just some things that are out of whack. So there's a couple of those things that you would consider. Maybe your general ledger is out of balance. If you are on an accounting method of accrual for direct bill in Epic, you could have direct bill receivable commission accounts that you're looking at and you're like, that balance just that can't be right. That can't be what is owed, or that has way too much in it, and where's my income at? Other things like cash on account. If you're configured to deposit to cash on account for direct bill, if things are processed incorrectly, you could have a bunch of those outstanding. Same thing with premium payables, producer payables, and government payables. All of those items, if they're not processed correctly according to your accounting workflows and your accounting methods, they can really get out of whack, and you need to address those and clean those up. Some other things could be aged premium payables. If you've got things that are old and outstanding, but you're like, I think somebody probably just duplicated that when we went live, and that was a mistake, and that's from 3 years ago. Those are things you can clean up. Same thing with your aged client receivables. There could be situations, again, where something happened off at migration and you think you can track that down and clean it up, or you just get to a point where you're like, okay, I know that needs to go, let's get rid of it. Months not being closed consistently can also cause some issues. Same thing with years not being closed consistently. Balances can be out of whack because of those. And then you could also have situations where if direct bill transactions have been entered, but maybe they're not associated to a deposit, or maybe transactions are duplicated because of maybe accepting a download, you deleted the reconciliation, and then you accepted and then you re-entered it again. So there's all kinds of things that could happen, and those things can be tracked down in reports. So there still might be some things as far as a cleanup is concerned that you just have to say, you know what, I can't find that. We're going to have to close it out, do some journal entries, clean these balances up, and we're just saying we're done with those. Then that's a situation where you could go with the cleanup. So if your bad data outweighs your good data, you might consider a fresh start. If your good data outweighs your bad data, you might consider a cleanup. So, but they are two completely different things. Okay, so if you're still unsure of whether to start a fresh start or a cleanup, there are several reports that we would recommend that you run to see what is the volume of bad data. Now, if you are processing all of your accounting in Epic, you may have looked at some of these reports before, or you might not even know that they exist. Come across that all the time too. I didn't even know that report was there. What is that for? That's cool. So if that's the case, here are some things that you can run, but keep in mind, anytime workflows are not processed correctly, you may have a situation where, for example, your accounting month has not been changed to the current month. So make sure that you check your criteria on the reports. Most of the reports that are listed here, you're going to run based on the default criteria. So if you're in your main report sections, you can revert those to default. Don't revert the custom reports though. That's bad. You don't want to lose those beautiful layouts, but you can revert to default criteria on any of the reports that say these are the default reports. Let me clarify that. Just I don't want you to lose any layouts. When you're in, let's say the general ledger reports, for example. If you look over to the right of the screen, it'll say based on. If it says this is the default report, you can right click and do a revert to default settings. If it says anything else, do not right click and revert to default, because that means there's a custom layout or custom criteria listed, and you don't want to lose that. All of the newer reports with the asterisks at the end of them that are from Applied, all of those are considered custom reports, so you would never want to revert to default criteria for those. They're basically copies of previous reports. You can use the same default criteria, but they have a much prettier layout. So back over to our list of to-dos here. A couple of other things to keep in mind is anytime you're going to run a financial report in Epic, always make sure that you go to month end and generate journal entries before you run those reports. So again, if we go over to Epic, you can go over to your procedures that I thought I had opened up, but then let me just take you there. So you can go from your home screen to procedures if you're not familiar with this, and you can click on accounting and then month end. Make sure that you're on the current default month. In this case, I'm on January 2024. Clean this up a little bit before I got to you guys. And you can click on actions and generate journal entries. What this is going to do is this is going to catch up your general ledger balances that are on the reports. So something like a balancing premium payables report or balancing producer payables report, anything that says balancing, it's got a general ledger balance on it that it's trying to match to transaction totals. So you want to make sure that you run your journal entries first, because if somebody's entered transactions during the day and that hasn't hit the journal entry yet in the general ledger, that's probably going to throw you out of balance. And you're like, wait, that was fine yesterday. Well, journal entries don't happen till overnight, so make sure that you run those before you run any reports. Same thing for any of the reports that are in the reports general ledger area. Okay, so what are some of those reports that you can run? Here's just kind of a general list, just to kind of see where you're at. So if you're looking at the balance sheet, for example, open through current default month is going to be your criteria, and that's anytime. So if there's balances on there that are old or need to be resolved, or if you look at it and you're like, yeah, that's wrong by like $1,000 or $100,000, that's typically an indication that you probably got some balance sheet cleanup to do. One thing that Buffy didn't mention earlier is that she is the balance sheet queen. She's just the queen of figuring out what's on balance sheets and incorrect T accounts, all that good stuff. So your income statement, you also want to run that and see what that's looking like. That can be out of whack if you haven't done a year end. Your year-to-date numbers are going to be off and not correct. You also want to see if that matches up an earned commissions report. So if you're looking at, the month of January and you run an earned commissions report, your earned commissions report should show the transactions that total your income, whether it's agency bill or direct bill. If those aren't totaling up, you're not processing something correctly in Epic, because your earned commissions report is going to calculate your earned commission based on the accounting methods. So if it's cash, it has to be paid. If it's accrual, it's based on the bill date or the effective date of policy, whichever's later. Your aged premium payables is another one that you want to take a look at. This is the one that most commonly has junk on it. And so I mentioned earlier, if you have old transactions that need to be written off, anything like that, or maybe they even need to be reversed. In some cases, we see that there's some workflow issues on the servicing side. And so maybe a policy didn't get bound, but nobody went back and reversed the transaction. That could be another situation. You also need to make sure your premium payables are in balance. And if you use that beautiful new report that says month end balancing premium payables, it will actually highlight the amounts that are out of balance. So if we take a look at that one, and this is where I like to use some of the newer reports instead of the older ones, just they're prettier. This is your balancing current premium payables. So if I do a quick print preview on this, I know they're going to be out of balance because I haven't run journal entries, but it's a good example. If we take a look at this one, it's going to show basically the transactions that are still outstanding due to or from the agency. And then it also shows the total of those transactions and the general ledger balance total as well. So if the general ledger says you owe $200,000, but your transactions only add up to $100,000, it's automatically going to identify that those are out of balance. And I might have too much data in my database, my demo that's outstanding. So you may want to run that and actually send it to yourself via email. So you can take some time on that one. So I'll leave that running and we'll jump back over to our reports, but wanted to make sure you know that this is the one month end balancing current premium payables. All right, so a couple other ones that we can run. You're going to look at your direct bill. So there's two different ways to run a direct bill report. One is just looking at unpaid transactions for all time. An unpaid transaction is a transaction that's sitting on a client's account, but it's not been pulled into a reconciliation in the general ledger, and it's also not paid. So pretty obvious there. You might also find cash on account entries on your direct bill unpaid report. That means that you've got a cash on account payment hanging out there and it hasn't been applied to a commission statement. Both of those things can create issues in your income because if the transaction's there and it's not paid and you're on a cash basis, it's not automatically dropping that into your direct bill income. Cash on account is just cash on account. So again, you have no income from that amount. So those items would need to be cleaned up. Sometimes we find that folks are manually entering direct bill transactions and they shouldn't have been. Sometimes those things fall through the cracks, but those are items that you would see that are an issue. Again, if you're on an accrual accounting method for direct bill, that can also affect your direct bill commission receivable. So if you have a whole statement that gets entered and it's not pulled into a reconciliation or closed or associated to a payment, then those items you've technically accrued the income for and they've debited your direct bill commission receivable, but you don't have anything to offset and clear that out. So those would need to be cleaned up. On the flip side of that, there's the reconciled not paid. Those transactions are transactions that are in Epic in your general ledger reconciliations area. So let me click, I'm going to cancel that report. I don't think reports is going to run that one for me. I'll come back to it later. Let's go down here to our general ledger. So if you have items that are hanging out in reconciliations and direct bill commissions, but they are unpaid, they're finalized, but they're unpaid, paid status U, those are items that are going to show up on your reconciled not paid report. So if you're not associating these to income, to actual funds, then they're going to show up as unpaid. Okay. Couple other reports, and you may not need all of these, just depending on how you're processing information in the system. Like a balancing government payables, that's just for those taxes and fees that are paid directly to the state entity. So if you don't use that workflow and you don't have to do that at all, then nothing should be on that report. But if you have items that are outstanding that you haven't paid and reconciled, they'll be on that report. Same thing with the balancing producer broker payables. That report might not be beneficial to you either, depending on how your system's configured. If you are configured to reconcile producer broker payables, this report is very helpful. If you are automatically posting producer broker payables to the general ledger, this will also be helpful because it basically acts like you're balancing premium payables just from a producer broker payable side. Aged outstanding current balances, that's your client balances. So if you see anything hanging out in that 90-day column, aged column, that could be something that's very old. It could be something that's truly due to your clients. It could be debits and credits that haven't been applied. So this is a really important report to review and stay on top of. If it's huge because you've never posted receipts in Epic for your client receivables, you might consider a fresh start. And again, some of these things can be cleaned up, but just think about the volume when you're looking at these reports. The unapplied cash credit report is also a good one to take a look at. This is going to show with different criteria, this can actually show some additional information. One of the purposes is to see credits that are on client's account that haven't been associated, but you can also see items that are direct bill commission that haven't been associated to a reconciliation, or premium payable disbursements or credits that haven't been associated to a statement. Okay. Buffy, any other reports that you can think of that I've missed in our beautiful list here?
I always like to run a balance sheet and P&L.
Yep, we got that one.
Those are good to look at. And I mean, I think that covers most of them.
Okay.
Yeah.
If you had any secrets as the balance sheet queen over there.
Yes. Yeah, I always, and depending on your accounting methods, looking at your balance sheet, especially if you do direct bill receivable or cash on account, you can see if you have some really out of whack balances there, meaning that you haven't, that the full workflow process hasn't been done to move those commissions to debit those accounts and then credit the income statement. That's something to look at. And also, if you have a really big accounts receivable and a really big company broker payable, you know that there's a lot of offset there that hasn't been done. So that balance sheet really can tell you a big story, especially with the balances, as to, what's out, how much cleanup might need to be done, or if you just look at that and you're like, gosh, there's just no way. Fresh start would be the way to clean that up as well. So yeah, the balance sheet tells a really good story. That's kind of a good quick one to look at first.
Yeah. And another thing that you just sparked my thoughts on, this just so much information, and we come across so many different situations, but another thing that you might see on your balance sheet is balances in main account. So if you see a balance in a title account, that should not be there. So if you run your balance sheet, let's go back over here to the criteria on the reports and drop over here. All right. Then when you look at that balance sheet and you see something in your main company payables account, or your main broker payables, or any of those title accounts, that information should not be there, because those accounts should be populating information based on transactions that are entered in your system and disbursements and receipts that are posted appropriately and associated to those premium payable reconciliations. What you would want to do is make sure that you include your sub-account detail when you run your balance sheet, so that you can see, is there anything that's hanging out in the main that shouldn't be there? So if we pop this one open real quick, just to give you a little example. I was joking earlier, we should probably do a fresh start on our demo account, because there's so much junk in it.
Yeah.
All right, so here's a good example. Direct bill commission receivable. Look at that. There's an 1120 with $20,000 in it. That should not be there. The breakdown should all be listed in these sub accounts for the specific carriers. This one's real funny because we've got cash on account in here too. I told you this would be a good one to clean up.
Yeah.
But you can see that, as an example, there are amounts in your title accounts that just shouldn't be there. If you look down at the company payables though, this one looks the way it should. Company payable is 0. Now, if we exclude the sub accounts, the company payable is going to show the total of all of these, but this is exactly what it should look like. There should not be anything in that title account.
Right.
All right, we have a question. All right. So let's see. We have from Rachel, how do you have sub accounts for agency bill, brokers, and accounts? Our direct has sub accounts, but our agency bill does not. That is a configuration, I believe. Are we looking at agency bill income? I think is the question. Let me go back. Forgive me.
Yes, income statement.
Yes, that's what we're referring to. Okay, so let's open up our income statement. Thank you. All right, and we're just gonna go specific month. I'm gonna go September 23. Let's do a fixed range because I don't know what's in here. September 2. Let's go to like December. All right. So there's a couple of configurations that actually get that. And you may actually, there's some that you can only have if you're set up on an accrual basis. I'd have to test it out, but I've changed the configuration on this a couple of times. So you may see things on here that we calculated, but then it wouldn't be there if we cleaned it out and started fresh. So one of the things that I have listed here is a breakdown of income by policy type class. So you can configure to the departments themselves and reflect policy type class. And then that's why you see bonds, liability, personal lines, workers' comp. Those are all based on policy type class. So in your income statement reporting, oop, I just closed everything. There we go. Let's go back to accounting method. We're going to take a look at this in a little bit as well. All right, and you're on a cash basis. So it may not work. It may not actually report with the cash basis, but you can certainly test this out because changing your income posting breakdown just changes the layout of the report that you're looking at. So currently I have it set to policy type class. So anything that had been posted in Epic when I had this configured to policy type class, those departments, is going to reflect under those departments, bonds, commercial lines, personal, etc. But I have to have it set on accrual in order for that to work. So if you set it to cash, I don't believe you can do post by premium payable entity payment. But if you go to edit your configuration for accounting, this is just one of those areas that's very, yeah, you can check that box if you have this way, or no, you can't check this box if you have this way. I can't change it in the system right now, but if you edit your accounting method and try to check this box, this is what you would really need. And your income posting breakdown, your reporting here, you can set that to premium payable. So that should be the combination. Don't hold me to it. I'd have to test it just to make sure. And you can also call applied. They have all of the specific ins and outs. A lot of times when I'm doing this, I'm doing it with an implementation lead, and we're setting these from scratch. And so that's how I've learned there's several different combinations that you can have for your accounting methods here. Good question though. All right, there we go. So let's jump back over to our presentation and move on. Let me get my screens back together here. They just do not want to cooperate. Got it. Okay. So finally, a couple of other things that you want to consider. If you're still trying to make a decision on whether or not you should do a fresh start or a cleanup, like I mentioned previously, if there is a really, really high volume of bad data, you may want to consider a fresh start versus a cleanup. It's sometimes a fine line. You know, some of the things you have to consider are, have you been filing taxes with all of these financial reports? Have you been utilizing the financial reports coming out of Epic? You're probably going to have to do a cleanup, not a fresh start, and it's going to take a little bit longer. Cleanup, you know, really can take a significant amount of time. It may take months. I mean, we've seen all kinds of stuff on the forensic accounting front. And so, you know, just going through status of accounts and those GL balances and transactions, it really can take a lot of time. So, you know, be prepared to do a cleanup if you're getting ready to do that. Another thing to keep in mind is you need to consult with your CPA. Anytime you're making any big changes like this, you need to make sure that you clear it with them first, because when you provide those year-end statements and you're doing a fresh start or even a cleanup, you're going to have some expense accounts that are used for cleanup, and we'll talk about that in the future, that are not really truly expenses. So you're going to need to be prepared to explain that and say, you know, hey, we had to clean up these items because they're old and we couldn't figure out what to do with them, and we had to close them out, or we had this in our old system, we're not going to use that dual system moving forward, but this thing is sitting here on my balance sheet. All right, let's see. So let's get into some of the nitty gritty. All right, there we go. So there are some things you want to do to prepare for an accounting fresh start. I'm sure you're like, wow, didn't we just prepare enough already? Nope, that was just preparing to make your decision. So couple of things you want to do before you actually start the process of the cleanup. You want to understand that you have to choose a cleanup month. This is going to be the starting point for when you actually want to begin accurately accounting in Epic. So, okay, this is the point where I stop, and I'm going to do it the right way going forward. If you decide on this in like June and your fiscal year is January to December, I would not recommend going back and entering that much data. You can, we've seen it done, but it is a lot, and it is a lot to backtrack on. If you're 3 months into the year and you want to re-enter, January and February, that's a little bit more realistic. So if you wanted to say, all right, January, I want everything good as of January 2024, but we're already in March, it's probably feasible to get that data re-entered. But once you get to a certain point in the year, you just have to understand there's a lot of data that's going to be complete, or that's going to have to be put back in. So let's see. Sometimes agencies actually like to, in that halfway, 3/4 through the year situation, like to do the fresh start and then still continue to run their outside program simultaneously with Epic. So using it really as a trial period. So through the end of the year, we're going to practice making sure that we're entering everything in QuickBooks the right way. And then just know that that data is not completely accurate, but as of January or as of our new fiscal year, we will know everything is perfect. Another reason to run it alongside with something like QuickBooks is because you might be really, really used to QuickBooks, and you really just want to have confirmation yourself that this is going to work and I'm going to get the information that I need. I promise you, you will. You just have to get used to it. They're not one and the same. Please be prepared for that if you're using QuickBooks. One thing I like to tell users when it comes to accounting and Epic is not an accounting system. It's not an accounting software. It is an insurance agency management system with accounting functions made for insurance accounting. So just something to kind of keep in mind. A couple of other things that you are going to have to be prepared for is you're going to have to run a couple of reports. You will need to run several reports to document the items for cleaning up. And one thing that I will also reiterate is each time you do a step of the cleanup, I recommend running the report again. So every time you do something in this fresh start, go ahead and run the report again. So you have documentation of everything you've done along the way. So if you mess up one of the steps, you can go back and say, well, what did I do here that caused that? And it's a lot easier to find that information. All right. So a couple of other things I mentioned earlier that you can decide on different accounting methods. So make sure that you review those accounting methods. And again, you can find those over in Configure, Accounting and Accounting Methods. You're going to want to verify that your income posting breakdown is set up the way you want and that you're set up on accrual or cash. Make sure you double check your agency bill and direct bill income posting for your producers and brokers as well. This is most often the area that we see agencies want to change because they might have just made a decision when they went live and didn't really understand the repercussions of that. Remember also that Epic has required accounts and many processes that you do in Epic happen in the background to affect those GL accounts, those required accounts. So that's another thing that you will need to make sure that is configured in your system. And you may also need to build out some additional accounts if you've been doing accounting outside of the system. So you'll see here that you've got the required accounts, clicking on that one. These are all of the definitions or types of required accounts in Epic. You just have to make sure that you assign one of your GL accounts to those accounts. So, accounts receivable, that's something that's going to populate automatically. Agency bill income, it's going to post based on transactions and your accounting methods. Some of these you'll never use, right? You'll never even look at them. Like, why do I even need that? You can't inactivate it. It's required. You just have to understand that it's there. You're not going to use it. But other items will be processing in the background there. If you don't have an account created for some of these, you might have to create accounts as well. I've seen some much older databases that have had new features since they were initiated, and they just didn't even have a GL account associated with them or created in the original chart of accounts. Your chart of accounts is also important to address. Keep in mind here, you may find some additional issues. You might find if you switch to chart of accounts and all, that you may have some duplicate sub-accounts. You might have 2 different travelers codes. Let me go do a little quick sort here by description. You might have 2 Allstate codes or 2 auto owners codes, whatever the carriers are that you are working with. So that tells you that there was or is an issue on the carrier or broker side. If anytime you see maybe 2 of the same type of company here, but they have different codes, they're just kind of the same name or close to the same name, that means you have a duplicate sub account and you're going to have to clean those up. So you always want to take a look here. This will tell you if you might need to go look at premium payables that are on client policies, and also whether or not the configuration is correct and cleaned up on the carriers or brokers themselves. All right. Next, after that, there is a little spot in system settings that you will want to go to if you find that there's a lot of volume to clean up for your fresh start. You can actually turn off the automatic generate system journal entries. So if you have a really high volume of data, probably going to want to turn that off until you're finished with this process and then generate for all of the old months. Okay. Oh, Rachel has one of my favorite questions. And I missed explaining that too. Wow, bad Lauren. So Rachel's question is, if we inactivate the broker or company, will it remove it from the chart of accounts? The answer is no. And that's why a lot of times agencies have to clean up their chart of accounts sub-accounts, because we may have identified the problem over on the company or broker side, but it doesn't talk back to the chart of accounts. So it talks to the chart of accounts to create a sub-account, yay, but it doesn't talk back to the chart of accounts when you inactivate it as a billing company, or if you just inactivate that company. So what you basically have to do is journal entry out from the wrong sub-account to the correct sub-account, and then you can inactivate those sub-accounts. And so in the case where you might have an Allstate, notice that there's a whole bunch of them. You'd have to inactivate all of those. After you clean up the policies, then you clean up the configuration of the company or broker, then you can clean up the chart of accounts. Very important to do that in that order. Otherwise, accounting might blow their top, flip a lid, whatever you want to call it. Good question. All right, so let's see. Next things that we're going to do, we're going to actually go over the overview of what the fresh start is going to entail. So if you're following along in your Epic database and maybe you've run some of these reports and you're seeing a super high volume, now I'm going to tell you what you're going to end up having to do from a high level, not all the nitty-gritty details, what you're going to have to do to clean some of those things up. So there are a few reports that you would run for the fresh start. These are the actual reports with the actual criteria. So if you want to take notes on this, screenshot it, whatever you want to do. There's going to be these reports. I think that I got them all. Yeah, I got them all on one slide. So these are the start reports of your fresh start. What you're going to be looking at is the balancing current receivables report, because you're going to end up cleaning that up. Your balancing current premium payables, your direct bill report, and then also your balance sheet and income statement. You won't actually clean up the balance sheet and income statement till towards the end, but these are some of the initial reports that you're going to want to run. So here's kind of an overview of the fresh start steps. Your balancing current receivables report is not the same as your aged outstanding current balances report. That's one other thing to really keep in mind. Yes, aged outstanding current balances is receivables as well, but the balancing is run with that criteria up through the whatever it was month prior to the current month. I have to keep a list of all of these items too. We have a checklist that we use internally as well. But if you run that report, you're basically clearing out everything up until that cleanup month. So if you run the aged outstanding current balances report, you might see some things that are in different date ranges. You might see debits and credits that haven't been applied yet. So balancing current receivables is really important to run that report for clearing out those client balances. So if you run a balancing current receivables report and it's 300 pages, you need a fresh start. You're not going to clean that up. I mean, unless you just have that high of a volume of agency bill on a regular basis. I'm sorry if you do. I hope you have a big accounting team. But if it's a lot of stuff that's just, really old, you're going to probably consider that cleanup. Another thing that you will run across when you are cleaning these up is there may, like I said, be some old outstanding debits and credits that haven't been applied. Depending on how you enter this receipt, Buffy's going to explain one of the examples in a second. But when you basically just enter a receipt and you put in a credit or a debit, depending on what the client's balance is, if it's a credit or a debit, to clear out that balance. But when you go in, you can click select receivables and apply those debits and credits. There might be some other debits and credits that are there. Your balance that you're putting in is just clearing what was on the balancing current receivables, but those other items will still need to be applied to each other. So Buffy's going to tell you a little bit different method for creating.
So there is another method as well, especially hopefully you don't have 300 and something pages of client receivables. But if you do have a large amount, yes, manually entering in these receipts can be time consuming. And like Lauren said on that last point, the system will slow down when you've just got so many receipts that you're entering, that you do have an option to import receipts. And I did that for one of my clients, and you basically just set up a mapping file. You can import a receipt. You just, download the current receivables into an Excel file and then create your mapping file, create the import file that way and bring it in. It'll save a lot of time. You still have to apply credits to debits in a lot of situations, but it will speed that process up if you do have a large volume of receipts to enter in. So that's something to keep in mind as well.
Very good. Okay, we had a quick question on unapplied cash credit report. I had a question in response to that of what types of transactions they are. So Danielle, you might have to ask another question to give me that response. Her question is looking through the unapplied cash credit report. They have old transactions in Epic as far back as 2019. Not uncommon. Will reversing these transactions out now have any negative impact? Possibly. So, so depending on, what your accounting methods are, what type of transactions those are, if you're on an accrual basis for these transactions that are entered, they've already been counted as income. If you're on a cash basis, they're unpaid, they weren't going to be paid. If you reverse those out, no, that shouldn't have any negative effect on your agency bill income. If they are direct bill, well, direct bill deposits are going to show up on the unapplied cash credit report. Oh, they're direct bill downloaded into Epic. Again, kind of depends on your workflow. So if your direct bill's on an accrual basis, then yes, it's gonna have some possibly negative impacts because that's income that would have already been accrued. If they were direct bill downloaded and you also entered a reconciliation, we would recommend reverse those because those are duplicates at that point. So if you review a little bit further, take a look at some of those transactions and look at the client accounts themselves, see if you can identify where there's some duplicates. Make sure that those transactions were correctly entered as well, then you should be able to do a reversal of those transactions. And when we find things like that, you can do an export of the incorrect transactions, reverse the numbers, and then import them back in, put everything all in one reconciliation, should equal 0, and you can close that without paying. We can also send out those directions if you need it, but Applied also has a handout that they will send that says, here's how to do a reverse import if you need that too. Yeah, lots of cool little tools. Okay, great question. Couple of other things on this balancing current receivables. The balances, you might look at the balances and you're like, I don't know who that is. I run into that all the time. And that is the case where maybe something's been financed and it's hanging out on AFCO or IPFS or whatever. Could have been one that somebody decided to bill the broker from the transaction. You'll have to go to the broker account to get that cleared. I've even seen them on mortgagees. So you may have a balance on the mortgagee. You'll just have to know that you have to use that entity to clear that balance. So sometimes they're a little sneaky. Another thing that you have to keep in mind is that if you have multiple agencies in your system, you will have to do separate receipts if you're using bank accounts that are configured to those separate agencies. So if you have separate agencies, you probably want to run a balancing current receivable individually for each agency, because if you're trying to clear a balance under a receipt that's associated to a specific agency, but the balance is on a different agency, it's going to say, you can't do that. You're like, why? So run 2 reports or 3 reports, however many agencies you have, so that when you're creating those deposits, whether it's via the import or you're just doing it yourself, oh, this was for a different agency. So I've got to use this agency bank account. The other fun frustration with this part is it will slow down. So if you get up to 200,000 or 25 lines or so of a receipt, Epic's like, no matter whether you're in the desktop or the browser, it's the same. And you just kind of sit there and wait. When you start waiting, that means it's time to close that receipt and go start another one, because the last thing you want to have is for it to just error out and you lose all of that data that you've entered. So big one there.
One thing that I've done before when there's a whole lot is I'll just do an alphabet receipt, all the A's and all the B's, and then that can break it up as well. Just so come up with some sort of a system to break it up if you do have a lot, so it doesn't start slowing you down.
Yeah, I like that too. Yeah, alphabet. Or I might get to close to the end of the C's and I'm like, it's time to switch to D now. Oh goodness. All of the fun things that we do in fresh starts and cleanups. Some of the other transactions that you can get rid of would be future agency bill installments. Or future agency bill transactions. It's not entirely necessary to get rid of those, but if you are changing your accounting method, that should say if you're changing the accounting method, not month, my typo. And then this is probably going to be required, because a lot of times if you're changing the accounting method, you can't, those transactions that are already entered have accrued some type of income or may accrue the wrong way, whatever the case is. So, but if you have things that are in the future and they're valid and they're correct, then you can leave those future items, because you're going to start over at that point. And if they're good, then just leave them there. But if they're wrong and you've got other issues like PPEs or commissions, probably want to get rid of those too. Best way to do that is to actions reverse on those transactions, because that closes out the payable. Just make sure that you actions reverse them in the actual month that they're in. Very important to keep an eye on your accounting month through this entire process, because you don't want to cancel something out in the wrong month. All right, then you have premium payables. Yay. So typically what we find, and I'll just realistically, the aged receivables part, the aged outstanding current balances, balancing premium payables, current receivables, that part is typically what takes the longest in the fresh start. So once you get to the premium payables, it starts getting a little bit easier. Again, depending on the volume and complexity of your structure and things like that, but typically it gets a little bit easier. You're going to basically create a journal entry that's your what we call in and out journal entry. So you can go in and just do a debit to your premium payable account. Yes, to the title account. That's the only time I'll ever say that. But you can use your penny to the premium payable and a penny debit to the premium payable. It's just a zero journal entry in and out. Lots of people call it different things, but that's what you're going to use to associate all these premium payables, because in the future, anytime you do anything that's premium payable, better be associated to the right receipt or disbursement, because that's what keeps us in balance. So, but in order to get them off of your reports and cleaned out, closed out, you're going to use that in and out journal entry. First thing you're going to do is go look for any suspended statements. So anything that is maybe somebody started over in the premium payables. I've even seen stuff back to 2019. So it's funny that you mentioned 2019. There's a suspended statement that, no, we've never put any accounting data in Epic, but yes, you did, and it's in 2019. So, sometimes you'll see things like that. You're going to finalize all those and associate them to that journal entry. Then you have to find anything that's unpaid. Maybe somebody finalized a statement, but they never associated it to a general ledger item. That's what other ones that you're going to have to associate to the journal entry. And then finally, you've got to go into the general ledger premium payable reconciliations and pull in all of the transactions that are just sitting on accounts that are unpaid and unreconciled. What's great is that there's kind of a shortcut to that. That's why I said it starts getting easier. Over in your general ledger, you'll really just go into the premium payables and say, give me all of the outstanding transactions and go ahead and flag them all. It will slow your system down a little bit. You will have to be a little patient with it. Might just click the button and then go to lunch and come back. That's fine. But that's one cool thing about the reconciliations in general ledger for this cleanup purposes. You could go in here and say, add a statement. I know I'm getting into more details than I told you I would, but it's okay. It's a easier way to do this. So you do, clean up premium payables. You're going to do flag all items. You can only do company and broker separately, so you'll have to do this once and then come back and do it again. But you're going to do everything, and just everything up through that, cleanup accounting month. When you do that, Epic is going to create a premium payable reconciliation for every single one of these. So that's, when the work comes back in, then you go back over to the reconciliations, finalize, and associate them all to that journal entry. So that's one step that's a little bit quicker. It's very similar over in the direct bill cleanup. So once that's just kind of an idea of what your premium payable cleanup is going to look like. You'll also have to clean up the direct bill items that are outstanding, because we can't process them correctly and we can't maintain checks and balances on reports unless we have everything in correctly. So you're going to wipe out all of the unpaid transactions. If there's an unpaid statement, very similar to what we just looked at in the premium payable, you're going to have to close those without paying. They don't have to be associated to anything. Spoiler alert, don't ever close without paying in premium payable. You can only do that in direct bill commission. Big no-no. If you have any suspended statements, so maybe somebody brought in a direct bill statement, just seeing what that would look like or something 2 or 3 years ago or whatever, you'll have to finalize those, or just go ahead and click actions close without paying. And then the process is similar for pulling all those transactions in, similar to what we just did with the premium payable reconciliation. It's just going to be less clicks, because all of those suspended statements that come in for direct bill, you can just click actions close without paying. And then, of course, the last part is it doesn't actually hit client accounts, but if you have direct bill commissions hanging out in the direct bill suspense, you're probably going to need to purge those as well. Check for valuable data, because if you are starting this over, you might receive some items in this month that maybe you did want to accept, but there is a function in your utilities that will allow you to purge those direct bill commissions downloaded from your carriers. Also, as a part of that process and in preparation for doing things the right way in Epic, make sure that you have your direct bill commission download turned on for anything that's available, because why enter it manually if you don't have to? Also, you have to be on a cash basis to do that. I'm sorry, accrual folks, unless you want to do a modified, like a hybrid accrual, and you can accept some, but not the others, or whatever the case is. I've got folks that have been a little creative with that accrual function. All right, very good. Then a couple of ending kind of things that you're going to do. You're going to have to clean up the general ledger, because you're going to have all of the balances entered back in. Basically, what you're going to do is you're going to go out and close all of the months, all of the years up to 2 months prior to your correction months. So you'll do that over in procedures. If you're not familiar with procedures, let's go back over there. That's where your month end and your year end data is. So this is another thing that, while I don't think we mentioned it early, I might have mentioned it earlier, but as far as if you have a bunch of months open, you come over to accounting and month end, you'll be able to see, oh yeah, here's a whole bunch of months that are still open. I can't close mine because I have suspended things back in like November. So I apologize. Mine don't look very pretty, but we use this for playing around with data all the time. So that's why we can't close those yet. That is something to keep in mind, though. If you happen to miss one of those suspended items and you go to get to this point and close things out, Epic will stop you. That you basically have to close all of these months out. And then, of course, you up until that 2 months prior to your cleanup month, and then you're going to close out the year. You can also come over to year end and see what years you have open. So if you go to your closed, it's going to show all of those years that are closed. I actually haven't closed the year for last year yet, so it shows that I don't have anything open yet. Coming back over to our month end, another thing that can be a challenge is if anyone has finalized a month. So if we go to closed, not finalized, you're not going to see that I have any finalized months. Everything has consistently been closed. You never, ever, ever, except for in a cleanup or a fresh start, want to finalize a month. That is one of my applied specialists for accounting lovingly called it the F word for applied accounting. Finalize. Do not use that. It's bad. It can really mess things up. Basically what finalize does is it locks you out of that month. You can't do anything else. You can't go back and make adjustments. You can't reconcile to that month anymore. So anything you do would have to be in a future month, which is exactly why we don't ever do that. Some folks ask me, well, what's the point in having a finalized option in here at all? I don't know, honestly. I'm just kidding. There are situations where agencies have certain procedures around finalizing information. So, if there are certain practices around, we're not going to go back into that year at all, we're not allowed, it is what it is, that may be a situation where the agency might decide to finalize a month. Most often it's not going to be the standard independent agency. It's going to be somebody that's like bank owned, because a lot of times they do not allow prior month adjustments. Everything has to be done moving forward. So very, very regulated on that side of the fence. Not picking on bank owned. I know I've mentioned that a couple of times now, but just stricter. All right, and so some of the other things that you'll need to do, you'll actually create a pretty large a journal entry to clear out, and let me switch back over here. You're going to end up using journal entries to clear out both your balance sheet and your income statement. So at the end of that clean out, on your year-to-date numbers for the income statement, it's going to say 0, nothing, because you've cleared out all of those balances. All of your balance sheet should come to 0. And there is a step-by-step in the handout from Applied that tells you, here's the debits and credits that you need to apply to each other to clear out all of these balances. Sometimes it can be very frustrating. The cool thing about journal entries, though, is that if you finish it and it's backwards, you can just open it back up and move the numbers back to where they're supposed to be. Because sometimes you might put in a debit that was supposed to be a credit. But that's okay, because you don't have to completely void that out and then put it back in. So you have a little bit of flexibility there. Then the last piece is that you're going to have to finalize all of the bank reconciliations. Now, ideally, if you've done every single step in perfect order and as it should be done and accomplished all of the challenges that have come along with this process, then when you do your bank reconciliation and flag all of the items, it should be 0. So that really is the final step to cleaning out all of the data that is in the system. So I think I've kind of mentioned a couple of the challenges that we run into as we work through the fresh starts. Things like different agencies, folks billing to things that are not clients, transferring balances and things like that. Those typically are where you run into hiccups. You might even be trying to clean up the debits and credits with like your aged outstanding current balances report, even if you're just doing a cleanup. If there's been a situation where there are multiple agencies on separate policies and you've got a debit and a credit, maybe the agency bill for this one was a cancellation and here's one that's an endorsement, they should cross each other out or at least be applied to each other. If those transactions are done under separate agencies, you can't apply them to each other. So another thing to keep in mind in this process is make sure that your structure is correct, because structure can create a lot of issues and you might find some of those issues while you're doing this fresh start. So keep in mind.
And one thing to note, when you run that balance sheet, if you see interagency, receivables, payables, and all that, if you are a multi-agency agency, structure-wise, if you see that, that means that you've had a lot of cross receipts or whatnot to show that you owe the other agency, and that's a big part of the cleanup as well. So if you do have multiple agencies, just be prepared. You may see a lot of that cleanup needing to be done on the balance sheet.
Yeah, absolutely. That's where you might want to do a fresh start or you might want to do a cleanup. You have to, what are you willing to do?
If they equal, then it's easy. But if they don't equal, then, there's a lot of digging you've got to do if you're doing a cleanup.
Yes. Yeah. Very good point. Thank you, Buffy. I told you she's balance sheet clean. So towards the end of your cleanup here or your fresh start, you're going to basically rerun all of the reports. Everything should have 0 balances. All of the transactions should be cleared out. There shouldn't be anything open. Your balance sheet and your income statement need to be 0 as well, because you are effectively going to re-enter that information. You will close the month prior to your cleanup month. That's one of the last steps. And yes, the only time I'll ever tell you to use finalize ever is you would actually finalize all of those prior closed months and prior closed years, because we're not using that data. We are committed in a fresh start to not using that data. It's there historically, but we are not touching it again for accounting purposes. And then of course you turn the journal entries back on and you would enter the correct GL balances and client opening balances. That step is a little bit more complex. And this is again why you want to make sure you consult with your CPA and say, hey, here's some funny things that are going to be on my balance sheet. I need to make sure you're good with this, etc. Because really the only way to get the opening balances for your general ledger back into Epic is to create an expense account. We call it like the cleanup expense account, and journal entry from that account and to that account to create the rest of your chart of accounts balances. So your income that you have recorded or you're stating as income, your expenses, your, producer payables, if you had some balances for those. It really truly is like migrating to Epic. You have to get those balances in as of the month end that you are starting over from going into. So if your fresh start month was December or January, January 2024, then you would put balances in as of the end of December and so on. And then as far as the client opening balances are concerned, there's a process for that too. You would use an open balance transaction. You're not going to use real transactions because these things happened in the past. So that's where it's going to be really important to identify who still owes you money. Same thing with your premium payables and your broker payables. Who truly still owes you money? Because if you don't identify those correctly, then you're still going to be out of balance at the end of the year. Typically, after your first year of doing this, we would still say that you're probably going to have a little bit of cleanup to do, because inevitably somebody might have entered a transaction incorrectly. They might have put in 10% commission and then it was 12.5, but you paid the carrier what you were supposed to pay. You hit up your cleanup premium payables account, but there's going to be a difference at the end of the year because you had to pay what you were supposed to pay. So there's still going to be a little bit of cleanup at the end of the first year of you going through this process. Again, very similarly to the way it would be if you had done a migration to Epic, which I'm assuming everybody's already migrated to Epic if you're on this call. All right, Jill has a fantastic question. Does a fresh start have to be done over a short period of time? Ideally, yes. However, sometimes it takes a lot longer because we run into hiccups. We have seen situations where certain things can't be closed out or reconciled, even though we're just trying to close them out and wipe them out, because Applied has to run a script. Something is stuck in the background, structure's all messed up. So ideally, yes, as quickly as possible, because you want to move right on into getting things done in that next month, especially if you were doing it over like a, fiscal year to fiscal year perspective. But there are still situations where it might take you a while to get your opening balances back in correctly. Might take you a while to get your client receivables back in correctly. Some of those things are okay. So getting all of the things up to everything's clear, okay, that's all right. But then re-entering your balance sheet and your AR, your open balances for your clients, you might take a little bit longer to do that because it took you a little bit longer to identify what should actually be kept. And we see that on the migration side as well. I can't give my AR report to Applied yet to enter into Epic or import into Epic because I haven't finished closing the month in the prior system, or I'm just not confident and still reviewing, the report before I want to give it over to Applied to put this in my new system. So I hope that answers your question. Hopefully you don't run into hiccups, but they can be inevitable depending on, again, the volume, complexity of the agency structure and things like that. Okay. All right. So last couple of things here. What do you do to maintain your data moving forward? That is the key to the kingdom, I would say, is we don't want to do this again. You don't want to have to do a cleanup again. If I haven't made it clear enough already, this is a big big project, and whether it's cleanup or a fresh start, it's a big deal. So the last thing you want to do is do all of this work and get it wrong, and then have workflows that are done incorrectly, and have things that are not processed properly, once you start fresh. So the first thing you want to do is, of course, establish consistent workflows, document those workflows, make sure that you have ample training and support, whether that's from, applied or consultant, or, maybe you've just hired someone that's an Epic accounting expert. Awesome. They're like, all right, we got to do this in Epic now. Good job. So other things that you can do, though, just like all of the other data and Epic, garbage in is garbage out. So if you don't run reports on a regular basis to see where something might have gone wrong, you can get behind very quickly, and you can run into issues that turn into a needle in a haystack, because you didn't run the report in June, and whatever happened must have happened in June. And you can go back and rerun June, but that doesn't mean you're going to have the same snapshot that you would have had if you would have run that at the end of June, because something else might have happened in a different accounting month. Maybe you voided something. When you voided it, you didn't void it for June, you voided it in July. So it's really, really important to run all of the reports that are recommended at the end of the month. A lot of those reports are what we've talked about today. Some additional reports might be your status of accounts, to see exactly what happened in that month. Maybe you got to the end of the month and you're like, oh, I was fine. Great, everything's in balance. When you get to July and something's out of balance, who did this? Go back and figure it out. You can use your status of accounts for that. So, keep an eye on the data that's actually happening, in your system. I say this lovingly, don't try to fix it yourself unless you are really an Epic accounting expert. You've been doing Epic accounting for a while. If you run into a unique situation in Epic accounting, I always encourage, reach out to your resources. I'll be honest with you, when I started in Epic accounting a long, long time ago, I actually started in TAM accounting. What? Things have been done in the system to fix stuff. I'm like, I don't even have a clue what happened here. And I'd call applied and they'd say, yeah, that's not what should have been done. Okay, well, help me fix it and get it back to the way it's supposed to be. So, I think it's really important to reach out to your resources, whether it's partner in the ACN or applied support or your consultants, to get some support anytime you need to fix things in the system if something unique shows up and you don't already have a workflow or a process for that. Fixes often become the problem because of how much Epic does in the background. Also, we recommend maintaining checks and balances, and I don't mean checks and balances just by reports and, verifying that data is correct on a regular basis, but have a second person that is your backup, or that's taking a second look at this information to make sure that, from month to month, everything is kosher, everything's clear, everything's correct. Additionally, if you win the lottery and move to the Bahamas, somebody needs to do your job for you. So it's always good to have someone that is your backup, that knows a lot of the basics and information in the system. A lot of agencies will have separation of duties as well. One person might handle the operating expenses, one might handle, the trust account. So there's lots of different things that you can establish that are best practices in the industry, to make sure that you have those checks and balances in place. All right. And then what are your next steps? This is my favorite part. You're like, I don't know, I don't want to do this now. If you're like that, just give us a thumbs up on the questions. I didn't mean to scare you to death, I promise. You can access, like I mentioned, the full instructions for the Fresh Start from Applied. They are like the official instructions. And a lot of things Applied has some great workflows for. Again, reiterating, this project can be pretty big. If you don't have the internal bandwidth definitely consider engaging with additional resources. Sometimes we have agencies who have, a receptionist or an intern, maybe another internal staff member that, just does processing. You may want to help to engage with them to, clear out some of this information, take on some of the volume. You can quickly train and say, all right, you're responsible for receivables or direct bill or whatever. So you can kind of farm some of that out. I also have agencies who will utilize their resources of virtual assistants. If they have already engaged with an outsourced company like a Resource Pro, a Patra, Staff Boom, there's all kinds of them. But if you have an agreement in place with those, a lot of times you can farm out portions of the workflow to them as well if there's a high volume. Or hey, you can reach out to your favorite consulting team at Kitech and we'll just do it for you. And we'll take all of the frustration off of your plate. You can't get out of it completely though, because we still have to ask you questions and you still have to pick those balances that are legitimate. So, but you have some options if it's something that you're interested in doing. We also have other services available. So in addition to assisting with the fresh start itself or with the cleanup, we can also help you with accounting training. So if you are like, hey, I want to do this, but I need some good training on how to do this the right way in Epic, feel free to reach out. We also do outsourced bookkeeping. So if you are interested in just handing it over, clean it up and hand it over, we can do that for you too. All of those things related to accounting, of course, but we offer a lot of other services as well. Didn't mean to give too much information in the webinar. I will not disagree with you if you say, that was a lot of information. But we just wanted to really prepare you folks for, if this is something that you're looking into, if this is something that might be an option for your agency, it's good to know that, that this is what it's gonna look like. So, all right, excellent. I'm going to pass it back to Kelly to take us home, and I hope everyone has a very wonderful afternoon. Thanks again for joining us.
Thanks, Lauren. Thank you, ladies, for a wonderful presentation. And to everyone who joined us, thank you for spending the afternoon with us. We hope you found today's presentation valuable to you. Like Lauren said, if you'd like to learn more about Kitech's IT or consulting services, please reach out to us using any of the ways you see listed here. We'd be happy to meet with you and set up a consultation to learn about your agency's technology or consulting needs. So thank you again and have a great afternoon.